Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Jeff Halley, Senior Market Analyst, Asia Pacific at OANDA. Jeff, thanks for coming on the show during the holiday season.
It's a holiday for some people, but not for us, Brian. We're still at the coalface.
Now, before we get your insights, Jeff, let's take a look at the sea of green that is markets across the region. Now, we're going to start with the Nikkei, which is up 0.54% at 26,790.9. The Shanghai Composite is at 3,406.69. It's up 0.3%. The Hang Seng is at 26,391.2. It's up marginally at 0.02%. The ASX 200 is at 6664.8. It's up 0.33%. The Kospi is up 0.43% at 2,818.80. And closer to home, we've got Bursa Malaysia trading at 1,647.33. It's up 0.38%. And the Straits Times Industrial Index is at 2,848.87. It's up 0.24%. Now, Jeff, what's your view of markets, given that most markets are basically in holiday mode?
Yeah, look, I think it's all down to President Trump coming out of the gates and signing off on this omnibus law, which funds the US government from Tuesday for another year, 1.4 trillion. And then, of course, he's signed into law this 900 billion fiscal stimulus. He's claiming that he's also convinced Congress that they have to vote again on increasing the stimulus checks, and also mentioning that they're going to vote or something on the Section 230, which protects social media sites, and also on the alleged voter fraud as well. I get a feeling that with the expiry of the unemployment benefits overnight in US time, there was a bit of negotiating, shall we say, horse trading going on at the last minute, and President Trump's managed to knock a few heads and get some of these concessions. Now, whether Congress, of course, will vote, particularly the Grand Old Party in the Senate, for higher direct stimulus payments is very much up in the air. I mean, I just don't see them passing anything more than this $600 that they had already voted. But you know what, it's turned market sentiment around quite quickly in Asia today, and it was a little bit unexpected, and that's lifted equity markets and asset markets in general across the region, and we've seen the US dollar gently retreat as well.
Now, do you think that funds are going to anyway take the opportunity to lock in some profits then before the end of the year?
Look, I think if they were going to close their books, they'd have done it last week. So, because obviously we have a lot of holidays today. For example, we have Australia and New Zealand away today. The UK is away today. Canada, I believe, is away today. Japan is on holiday all of that New Year's Eve day, 31st. There's lots of holidays. There's also religious holidays of various kinds around this time of the year as well. So the market participation is quite low. And so I don't really think it'll be a case of these institutional investors looking to close out books during this week. If they were going to do it, they would have done it already.
Now, let's look at China. And over the weekend, the National Bureau of Statistics released data which showed that profits at China's industrial firms in November rose 15% compared to a year earlier. Now, what should we read into that data?
Part of that data, the reason that it's increased is because PPI has fallen, so the producer price inputs. So things have got cheaper for them to buy, to make into goods to sell, thus their profits go up in straight line terms like that. But I mean, we can't deny that the data, even stripping that out, is excellent and is just yet another number coming out of China in 2020, which defies the rest of the world. China really has led the world out of, well, I wouldn't say out of this COVID-19 recession, but certainly has led the world, keeping the lights on in the global economy this year far and wide. So I'm expecting to see more of that in 2021 as I'm expecting a fairly broad-based recovery in 2021. Perhaps not until Q2, but it's certainly going to happen.
Then moving on to commodities. Now, we've had a stellar year for some commodities. Now, especially including iron ore, copper, and palm oil, which are at record levels. Now, what's your view on the commodity markets in Q1? And perhaps give us some indication of why, despite the pandemic, some commodities have done so well.
Well, you just have to look at China's factory output to see why iron ore and copper have done so well. When you look at semiconductors, working from home, technology, these machines that we need to do all of this lovely stuff, that requires copper because all the wiring is copper. Actually, it's better to use gold or silver, to be honest, but for obvious reasons, we can't all have mobile phones with gold or silver wiring. But copper is the go-to choice there. So given that we're looking at a global recovery next year as these vaccines start getting out more widely and we can start thinking about international travel and a return to something approaching what used to be normal, but also this working from home, for example, mega trend that we've seen seems to have commenced or been brought forward by COVID-19, we can see that there's still going to be this huge ongoing demand for things such as electronics that will require copper and other materials such as that. We see countries around the world recovering from their recessions. By default, consumption should go higher as well. That will increase the demand for commodities. Also, we're going to see the US dollar fall next year. I'm quite certain of that. That will also boost commodities. So when you put all these factors together, I think we're really going to see asset price inflation next year anyway, but the outlook for commodities is quite rosy, assuming that this vaccination rollout remains on track.
Hey, Jeff, thanks for your time and your insights.
My pleasure, always.
Now, we've been speaking to Jeff Halley, Senior Market Analyst, Asia Pacific at OANDA on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out